bar there extremely significant? Can anyone tell me? I know it's got high volume on it, but what is significant about that bar? If you know VSA, you should be looking at that and saying, well, yeah, look at that. Yeah, they're all getting it. It's the range, correct. It's exactly that. It's the range of the bar. That's what makes that significant. And the low of the bar does not penetrate the low of the climactic bar, and it closes in the middle. Buying is taking place on massive volume in these two bars. And how do we know that? Because the next bar responds up. Now, the market maker will never push the price up too high against themselves. So the price then comes back down, and this time the volume is less than the climactic bar in that area. We get here a beautiful example of a two-bar reversal look. They bring the price back action down to this level, and then boom, away it springs. Boom, up it goes. Yeah, and this time we haven't got ultra high volume. We've got a fairly low volume bar. It's just telling me here that on these four bars, the accumulation phase had taken place. Now, if you wanted to go in and buy the market here, based on my rules, you'd wait for the third red diamond, okay, just here, which you can see right here. But you can actually, if you use a smaller time frame, you would have got in a lot earlier. Joe says, today's ES on the daily bar says it's a sign of weakness. Okay, I'll talk about that in a second, Joe, because I'm expecting to see a test, okay, because there will definitely be a test in the next day or two. These indicators here, Fiona, are developed by a guy called Rob Hoffman, who's a trader. They're looking at momentum. They're momentum-based indicators. They're very similar to the diamonds. Okay, they're very, very similar to the diamonds. They're just showing us here that the market is beginning its move up. It's beginning its momentum. Now, where are we going to trade this? Okay, we've got a very high volume up bar. That's very high compared to that bar. Markets generally don't like to see that and will retrace. But watch what happens here. We do come back down into that area. And we do, not once, but several times. But as we come back down into this bar, the volume remains light. That tells us that there's not a lot of selling pressure there. And then here, we get more buying coming in. Hence, we get a green signal in an uptrend. Great place to, if you wanted to put an entry in there. Yeah, we could call that the spread or range of the bar. I mean, these are narrow spreads or narrow ranges, depending on, when we refer to a range of a bar, everybody, we have some bars that have narrow spreads or ranges, which is simply the high and the low of the bar. And then we have bars that have wider ranges. What we're looking for to buy a market when you've got strength in the background is a pullback in the trend, preferably on low volume. But this is actually where VSA, you appear to contradict yourself. And I've had this happen to me many times when I say, well, look, you can buy the market on low volume down bars when you've got strength in the background. But this instance shows you can buy the market when the volume is actually high. Because here, the volume is high because there's more buying happening. And the result, we can see. Now, you'll notice that the market continually revisits the area where the high volume appeared. And it comes back down. And this time you'll notice the volume gets a little lighter. You see as it comes into the body of the bar. And that's because, and you'll see my trend channel here, the buying and the support comes at the bottom of the trend channel. So around 12:05 today, we came to the bottom of my channel and we moved away from it. So all we're looking for now is one principle to go long as the market goes up again. Can anyone tell me what we'd be looking for now to buy this market? What's the principle? Remember, I'll give you a clue. We're in a rising market with strength behind us. Okay, we're in a rising market with strength behind us. This is a 5-minute chart. What are we looking for? Okay, yes, a test is one, absolutely. The other signal, which you often see in these markets, is buying on high volume down bars like this, and we call it strength coming in. And it tells us there, the software is telling you that in an uptrending market with a load of strength behind you, the buying is taking place on a down move. Most traders buy the market when it jumps up like this and they chase the price. That's how they lose their money. Because you'll find if you get in on that bar, suddenly the market falls. We buy on down bars when we have strength behind us. Okay, so let's see if we can see any testing as we go forward. Well, that bar there, believe it or not, it doesn't have a signal on it, but that is a test, and it's immediately testing the high volume behind it. And you can see we come to the bottom of my trend channel and immediately respond positively. Now, yeah, we're back into the body of the high volume bar, and now the volume is extremely light. That tells me there's no selling pressure in the market. The market has to go up. There is no selling pressure. Now, in this morning's live trading room, in the Elephant Tracks live trading room with Jim Easter and Pat Hammonds, they gave a target today, an initial target of 12.14. And the reason they did that is the market had shown early on that it was being accumulated. So in our live trading room, by the way, if you want to attend that live trading room tomorrow, it's completely free of charge. There is no cost. So I'll put a link up in a minute so you can actually log in and see the guys trading live. They took one trade in there today, great trade. Pat took it. He's an institutional trader, very successful trade. So we see this market is strong. It's not weak, and it comes down to this channel. Now look what happens at the end here. We start to come at the end of the day, we come, because of this bar, the highest volume that we've seen all day, with the next bar down, this produces a sign of weakness. Now if I put my indicators onto increased sensitivity, you'll see I produce a signal here. Supply enters the market at the end of the day. This is what happened. Profit taking was taken by the big institution on that bar. That's where the profit taking began to happen. Okay, so what was the result of that? If you'd been long and you'd seen that, when the next bar closes lower in the body of that bar, you have to reverse your thought process, because now there's weakness appearing in the market, and it's the very, very high volume. Remember that weakness appears on up bars like this, and strength appears on down bars, as we see here. Now, all I'm looking for now is, do we then penetrate the bottom of my trend channel? Because if we do, I'm going to start looking for short trades. We test. There's your first test. Okay, but why is that not a good place to go long now? Can anyone tell me why that is now not a great place to buy this market? This is the ES. Why is that now not? All down here, there were some great places. Why is that not so good, not so attractive? Because you've got, exactly, well done, a seriously weak bar right behind you. There's a lot of selling in that bar. So they're testing now, they're testing this bar to see if it will succeed or fail. It fails miserably, ladies and gentlemen, miserably. And we blow out of our channel, okay? So when you see a failed test, which is this here, and the price closes lower than the test bar, with weakness in the background, you can now start looking for shorts. And I have to say today, market gave loads of shorts on the 3-minute and 2-minute chart, as we'll show you on the way down. Now, as the market fell, as you'll see, which it did, it came all the way down to support. And at the end of the day, this happened. Okay, we came right the way down, and we had a very high volume bar here, and then we have very, very high volume here. Okay, stopping volume at the end of that. It wasn't enough to stop the downward move, but it was a big sell-off. Now, how does that look if you want to trade that on a 1-minute chart? It looks absolutely beautiful. Let me show you. Don't look at this right now because it's still running live. But look here, all the way down. We've got the trending diamonds are down. Okay, you've seen the weakness in the background already on the bigger time frame. Okay, there is what it looks like on a 1-minute chart. When the weakness comes in on the 5, we see it coming in on the 1 first. So supply enters the market. We do not take a short in there. Why? Can anyone tell me why we don't take a short there? Anybody tell me? Lauren's got a hand up, but let's see if anyone. Why don't we take a short on that bar? I didn't short that. I actually shorted that. That's where my first entry was. And then the market went sideways, and that's the trade that took me into the profitable trade. You're right. The diamonds are still here. They're green, aren't they? So the price is still trending up at the moment. We don't know that's the end of the market. But when I see weakness appearing on the 5-minute chart and the diamonds turn red and the momentum changes to down, I'm looking for any shorts where I see volume spikes like this, like this. That's no demand, look. No demand, and you've got weakness in a downtrend. So you can now trade this to the short side because the smaller time frames are turning over red. And if we look at the scanner in Trade Guider, you'll notice that, well, you would have seen this. At the end of the day, every single time frame began to turn red. You can ignore these smaller ones because when the market was open, these were all actually red. And that tells me I have permission to look for short trades now. Even though the market had trended up for most of the day, this heavy selling by the large funds gave us a great opportunity, as you can see, to take a move. I mean, talk about volatility. 12.16, 12.17 down to 19.99 in the space of an hour and a half. And you got some wonderful VSA principles here. Wonderful. I mean, you know, you can't go wrong. And again, you saw them on the 2-minute chart. Same thing. Look, there was such an obvious one. No demand in a downtrend. Best place to short the market. Not in an uptrend. We don't want to look at no demand when the market's trending up. We look at no demand when the market's trending down. Did we see it on another time frame? Oh yeah, look, loads of them. These setups all confirmed an upthrust on the 3-minute chart. If you couldn't have caught at least 5 points out of that market today, I'd have been surprised. And I know that our trading rooms did. But I certainly know that Pat took a trade in here. What about the 5-minute? I've just shown you the 5-minute chart. Look at that here. What did we see again? 7-minute chart. There it is before the decline. Trap up move. 9-minute chart. You see it topping off here. And all the diamonds are turning red. And that is very, very, very important. You're trading in harmony with the trend. So your sell order goes in below the no demand, Rusty. Yeah, I don't short on no demand. I put my order 1 tick below the no demand bar when it appears. And then if you get a bar like this, which is a gotcha bar, which I talk about in my book, where the market pushes through, you're in the trade, and you can get your stop to break even very quickly. Very, very quickly. It doesn't take long to get the stop to break even. Now, all the charts today, I use the NASDAQ as my leading indicator. Okay, so I'm always looking at the NASDAQ. This is the 15-minute NASDAQ. You see, now what I did notice about the NASDAQ, it's been the leading indicator. It moves just a bit before the E-mini S&P does. And here, we could see here, there was some buying here that came in. We see the high volume there, and it pushes the market up on the NASDAQ. And if you look at the 5-minute and the 3-minute chart, in fact, I'll show you the 2 because that was just as good. When the NASDAQ topped out today, it moved much quicker, as it often does. And you got an absolutely stunning entry. Even though the diamonds there were trying to change, you had serious weakness. This is a seriously weak bar at prior resistance, look, on the NASDAQ. There's your resistance there. And look at that volume. Highest volume that you see. It closes on the low. The next bar is down. Once you see that, you can jump down to a 1-minute chart and just wait for the diamonds to begin to turn red. Jeff, the gotcha bar was breaking the ice. Absolutely, it was. It took out the price support there. Absolutely. Okay, and let's. I'm going to ask Lauren to analyse the gold market for me. She has not been prepared for this. She didn't know she was going to be doing this, and so she may be. Just so you know, the analysis may not be 100% correct. It may be. I don't know. So we're going to get you to look at gold, and I want you to tell me what you see. So this is the gold futures chart. Okay. Now, I know that's yesterday's bar, so that's the 11th. So I know gold went up a little, I believe, today. It's going up a little bit on no demand. Let's go and put up the, well, let's just ask Lauren to analyze this chart. This is the weekly chart of gold. This is the day that I did my YouTube video where I forecast the fall to 1600. That's all on YouTube. It was done well in advance. The reason was, look, there's no demand at market top, very common. And we can see the last few weeks, with this bar is not finished yet, keep that in mind. So this was a weekly chart. We cannot analyze that bar, but if it stayed like that, I'd be very, very quickly shorting that if it stayed like that. But it's not there at the moment. So I want you to imagine, Lauren, it's Friday and that market's now closed, and I want you to imagine that bar has stayed like that. I want you to tell me what you see.
Okay, so just pretend that that's the close.
Pretend that's the close, right. And then that's got a signal.
All right. All right, so the first thing I'm going to look for is what's my overall trend. I'm in an overall green uptrend. Here's my green diamonds. I'm noticing a couple things here. Number one, here's a huge ultra volume bar. So it's up on a very wide spread, closing somewhere in the middle. That doesn't tell me 100% if it's more buying or selling. But
don't click on it. Tell me what the signal is.
No, I wasn't going to click on it.
Tell me what the signal is.
Oh, listen to him, Mr. Bossy Pants. I just wanted to point to them what the bar was. But the thing I was going to say, though, is that what I can tell is you have narrow spread bars all here, 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 and then it starts to come up, and now you're in this very large volume, climactic action, and you're up, right? So it has to tell me that they're basically some sort of buying, and they're trying to potentially reverse this this overall uptrend, right? So let's click on it. Potential buying climax, a high to ultra high volume up bar, we have that. Closing in the middle, we have that. Shows supply overcoming demand and indicates professional selling, right? All right, so here we go. Now it goes up again. It's not quite, this is the first time it's gone up this high from all the way over here. You can't see anything else, but the volume's gone down. So that is concerning to me because that tells me that the demand for higher prices is not there. Also, I would guess this is probably no demand. Yeah, and it's no demand because, again, the price shoots up, but the volume goes down. So professionals aren't interested in this higher level. I would expect it to drift up a little bit and then probably change. So now, again, here we go again, ultra high volume, holy crap, and it goes even higher, but look at where the price goes. So it tries one more time to literally break through the ice, as Jeff's words were, but it's closing in the middle. So there isn't as much of a demand again. The volume here tells me that they're about to do something. Again, momentum, again, a sign of reversal. And this is basically what we want to see. So they've tried their effort versus result. I guess you've heard us mention before. They're putting a huge effort to try and rise this, but it's failing. Okay? So one more time, back up into the body of this bar, slightly higher than the no demand bar. Watch again, volume still stinks. All right? It hovers over here to catch some more people. And then now, what do you notice? Big, big gap down,